In the last 20 odd years, I've noticed a bit of a trend in the commercial investment market. It's been fairly distinct in my eyes with my clients, etc., and it seems to be staying that way at the moment. First level investor is usually the mums and dads, the small investors who usually purchase residential property, $2 million and down. Then you've got a second level, a bit of a gap. It's the second level, say the $3 to $6 million mark, which are the more wealthier families, the smaller companies, etc. Then you've got a slight little gap again, and you've got the funds managers and obviously the very wealthy individuals, companies, etc. Now, what we had, especially in Australia and other countries, is a growing need for superannuation. These superannuation funds normally work on funds of $100 million each, and they want to make management easy by having lesser properties in that $100 million range. So they may buy larger $20, $30 million buildings. Usually they would stick to around about $10 million, $10 million buildings to make up their $100 million portfolio. I noticed that shortage of these sort of properties, and they've had to go to the lower price level. So the level which appealed to the middle level investors, the $3 to $6 million mark. Consequently, the yields have gone down in that middle range. So in order to find better yields, the middle range of $3 to $6 million mark had to look at the lower level below $2 million. And consequently, those yields are getting skinnier and skinnier. For example, residential is around about 2 to 3% net. And for the higher priced properties, it's lower. You always hear gross, never hear rent. Now, another situation is that things like, recall 10 years ago, you'll struggle to get 6 to 8% return on childcare centres. Now 3 to 4% return. So the great demand for that. People had to diversify, whereas they were regarded as high risk 10, 15 years ago. They're now lower risk, and people worth to take the risk because there's a lack of business properties which are getting a decent return. We noticed that with retail getting skinnier. On the other hand, things like commercial offices, they're losing flavour because obviously since COVID. Then you got the opposite effect with industrial. They are now the flavour of the month. Some investors are getting some great returns here. And what I see happening there, they're getting skinnier returns. Where they were getting 7, 8% before, they've dropped down to the 4 or 5% mark. And it continue to get lower, I would think, as they become more popular. So they are, at the moment, like everything else, everything's a flavour of the month, but the returns more likely to get skinnier as more demand increases. The question is, how do you get the better returns? And how do you get into a declining return market? What I've seen recently is that people are getting more and more involved with businesses. For example, you can buy a unit or house and get your 2, 3% net return, or you can buy a boarding house, which is similar to a block of units, which are getting their maybe 3, 4% return, getting 6 to 8% return, but they require more work. But the thing is, everyone wants a passive investment. Fair enough. We've got our own jobs, careers, etc., businesses. We don't want to be managing properties. I don't believe any property, including residential property, is totally passive. It is more passive than having a business property, but I'm sure if you own a residential property, you've had to replace a stove, fix a window, change tenancies, have a dispute with a tenant, etc., etc., etc. You get the same sort of problems and sometimes more with commercial property, but nothing's really 100% passive. So you say, well, I'm not a business person. Maybe I can't get into business. Well, maybe. But if you are a business person, there may be opportunities for you, or maybe partner with some business person. For example, industrial. The trend is now there's demand for food manufacture. So if you get into with someone or to yourself into food manufacture or something on those businesses to utilize an industrial property, you'll get the much higher return. I recall in a property downturn years ago, and I had someone ask, they're looking to buy investment. What will I buy? They told me they looked at a well-known shopping strip where it was suffering from declining tenancies. It used to be popular, and there's no reason why it would become popular after that. So my recommendation to them is that they were pretty good coffee shop operators. So I thought, have a look at the area, find something which you believe is suitable for the coffee shop, get in there, and maybe get in there, operate it. If it doesn't cost you too much money to set it up, or maybe it's already set up, build it up, and when the economy improves, you can sell it either as a coffee shop, as business, or as an investment situation. And guess what? 3-4 years later, the market picked up and it became popular again. Another example, we had a client who was running a franchise business out of a shopping centre, and the landlord decided to increase the price to $5,000 a week. At the time, I said to him, look, at that sort of rental amount, you probably can afford to buy a building of $4 to $5 million. Anyway, I had a building close by in a prominent location for under $2 million. They moved into this, purchased this building. They moved into this building, they set it up there, and they operated it for a couple of years. Then the franchisor wanted to buy the franchisees out. So what they did, they sold the business, which reduced their cost price, and the franchisor became their tenant. I would say the current net return has gone from the usual 4% mark. They're probably getting around 9, 10, 11, 12% mark now. Passive investment. Franchisor is running it now. So basically, if you look around, you're a business person, especially if you're in businesses, maybe consider the fact that you can work on those premises. If you can't do it, take your lease out. There's no guarantee that the landlord will renew your lease down the track. So these are possibilities. That's where I believe it's all happening. And the same thing happened with hotels. They've become more popular now. They were pandemic, they suffered. Now they're getting back. Tourism is back. Conferences are back. And things are looking better. And other things like retirement villages and hospitals and rubbish tips. And I can go on and on and on. Commercial investments, only offices, industrial, retail. Other ways you can get into commercial real estate and other ways to get better returns. Like the e-commerce. This is Contacetus from CC Properties, and subscribe to this channel for more videos like this.